Good morning, everyone. This is Chrisi from SolsticeATR and Balkan Capital Research. Today, I'm going to call this video, is it the pandemic box or the Pandora box that has been created by this overall market panic? One thing I'd like to say, we go from greed to fear, fear to panic. Once the panic settles, things do turn around and we end up going the opposite direction. First of all, since 1991, I was a young fellow, didn't understand much about the stock market, but I noticed the real estate bubble from 87 through 91. Then in 2000, I was around. We had the technology bubble. They speculated, they blew that one up. We had the 2001 crisis, and I'd never forget the 2001, the 9/11. In one day, I lost about $5 million for my clientele in their retirement accounts. And in a couple of days, I was down about $28 million. Nobody talks about these things unless you've seen them. Did we recover since then? Yes, of course. Then we had the 2008 real estate bubble. Again and again, they repeat the same cycle. Now we have the 2020 pandemic crisis due to the coronavirus. Is this coronavirus going to cause more fear and pain and panic to the people to be inside closed doors and that everything is going to hell, manufacturing, consumer products, staples, and people's retirement accounts are getting blown up, especially retirees who rely on their income. Let's say, for example, they have $100,000 and that account goes down 25%. Now they can withdraw from the 75,000 instead of the 100,000 to keep sustain their income living. So if people need help and understand what to do, give us a jingle. We're here to help in up market, down market, or side market. Let's first of all break down by looking at the small cap. This is the RTY small cap Russell 2000. I took it from 2008, 2009 when we had that real estate bubble, then the blow up, we got to that bottom and we eventually rallied back up. This is the only indicator in the small cap that we lost the channel to the downside. We hit the 161A, we missed the 50 fib, bounced off to close above the 116. In order to Russell to continue higher, it has to come back to the backside of this channel. Because if I take this low here, I draw a Fibonacci to the top. If you noticed, we bounced exactly at the 1,115, let's call it, on the small cap to the upside, which was basically this candle here. We closed above the 116 and the 38.2. We're right on it. If there's more panic in the market, I would expect it to come back to this area, but this is a lot of consolidation here. Remember, trade what we see, not what we think. That's a small cap, first of all. It's down about 32%, 33%. Let's take a look at the $ DJI. This is the Dow Jones Industrial, which represent only 30 companies in the United States. It's coming up. Give it a second, guys. Okay, if we notice, I didn't do the fib from here all the way up. My machine did it. The 50 SMA and the 78.2 here and the 116 would be here. We bounced off a little bit above the 38.2. If we take the high from here all the way down to here, if you notice the machine, that's your 61.8, that's your 50, and that's your 38. We bounced off basically the 61, the shorter distance from here to here. We came back to close at the 50 simple moving average. In order to the market to continue lower, we have to lose the 50 and the 50 SMA in order to come back down to this area here and here. This is where the most consolidation, and if we can draw a channel up, we're still in an uptrend. What I can do is grab a channel to show you how to do this correctly. We grab a channel, we grab that low from 2008, we connect it to the nearest, oops, the machine did the wrong one. Okay, let's just redo it. And we grab it to the nearest point here. We're still in an uptrend. We basically missed it and bounced right off it. In order to continue higher, remember we have to U-turn and go back higher here in order to go up. If not, we fall through the 50 SMA, 50 fib, 61, look for the 50 and the 61.8. Let's take a look at the NASDAQ NDX. And the NASDAQ NDX, I did the same thing. The machine grabbed the bottom of 2008 and the high. We bounced quite a bit higher off the 18 SMA. We got to the 38.2, went a little bit below it and bounced back up. This is, where my Fibonacci's are. I've drawn them from here all the way up there. We bounced off it. We're holding the 50 simple moving average and the 38.2. For the NASDAQ to continue, we have to lose this channel and lose the 50 in order to come back to this area to continue higher. And this is where most of the consolidation was. If I grab a channel, I'll grab this candle here and I draw it to the nearest one here. Oops, the machine did the same thing again. We'll grab it again from here. There we go. We connect it to the nearest one. We still have a long way to come to the 50 Fibonacci and the 50 SMA. So in order for the NASDAQ to U-turn and come back up, that means that the coronavirus, they found a cure, something's going to change, and we go back up. If not, we continue lower, and this is the first area you look for a bounce off it. Okay, everyone? Let's take a look at the SPX. And the SPX, I did it from 2008. I did the channel on it. And if you notice, we had two other channels that we came to. We bounced off it. We bounced off the 50 simple moving average on the monthly. We're holding in this area, the 38.2, and the support is here. See, the machine grabbed that one to up here. If we're going to hold this area, we consider that we got close enough to the 61.8, and we're going to go back up and off the 50, then we have to get back to the 28.28 and 28.88 to continue higher, and 29.20 area. So this would be to the upside. If we stay below the 27.12, 27.22, it's going to be a problem for us, and we may head back down to the side of this area where most of the consolidation is, about below that channel. Let's go down to the S&P 500, which is the E-mini contract. I'm going to go to the daily. Now I'm going to go here. We're still in a down channel. If you notice, this is the down channel. We bounced back on Friday. We couldn't clear the 27.12 because that area in the 28 in order to get a little bit higher and get some traction to the upside. Let's take a look at the ES. Come on. Get there. Okay, let's just zoom in here just to show you what happened last week. This was the high and the low. We bounced off the 53 quarter, which was, we had 55. We came back 50% of the move if we take the channel from here to here, and you can see that we bounced off. Oops. Let's just do it here just to show you kind of an idea how it did. So if we take this one here, that was the week before I called, hey, watch for the 50% retracement or the 61.8. We got to it, we double topped up there, we couldn't get above it, and we eventually fell down and we came back to the 161. Then we bounced off the 58, 25, 58 to continue higher. And what did we do? We closed right underneath the 2700. We got to the high of 26.97, and this is not including the overnight action. If I go to the overnight, I go to style in the setting, I go to the futures, overlap, highlight, and it'll show us that the overnight action we went to, we stalled right here. So if I go from here to a 20, let's go 5 days, 15 minutes. And what I want to do is use the volume profile to show you what happened in the last couple of days. If you noticed, 2 days ago, we had this major fall. We went up to close in this area, came back to close in the low. In the overnight, we fell back to the backside of this channel, and we came back, crawled up in the overnight to up here. Then we stalled. We had, circuit breaker. Then we fell down inside the range, looked into it, and we ran back up to the prior day area. And this was the low in on Thursday's action. This was 27. 0275. We missed it by a little bit, and the high was here again 2697. So this is the small area we have to keep an eye on Monday to see if we're going to continue higher and fill the prior gaps, or we stay on under pressure and we fall further down. So if I'm going to look at it in a little bit more detail, I'm going to use the volume profile. I'm going to zoom into just to Friday's action to explain what they are. I have a value area high here, a value area low here, and a puck where most of the price and contracts were spent. So we are above the puck, which is the 2649 to the 50 area. This area is very important to me, the 2550 to 55. If we stay above it, we stay elevated. And if we fall back through this area here, which is the 2632 to the 20 area, it's going to give me an idea, hey, there's a little bit of pressure between the 2624. We can come back and fall down. If we can fall back above the 2697 to the 270275 and continue to the upside, I'd like to clear the 2712, 2724 in order to continue to the upside and fill part of the gaps, and we end up at the 28 88 to change the trend in the overall market. If I go to the daily chart, I'm going to go in here in the style setting. I want to eliminate the volume profile out of my way so I can do something else on it so I can show you a little bit more cleaner chart. And I'm going to uncheck the value area high and pucks out of the way so it doesn't show up on the system. Close it and push apply, and we go OK. If you notice, we're going to go to the daily here. This is the down channel that we had. Whoops. We are in the down channel. We're trying to come back above it. We got this outer cone and this wider one here. We are in an open cone. In order to clear it, I'd like to see the 2712 and 2728 clear, which is this candle here. That was what the open of it was 2738. So this area is going to be very critical for me to come back up here in order to continue to fill the first and second gap. And we have one little one down here between this one and this candle. So I'm always looking for opportunity on either side. We're going to trade what we see, not what we think. And it's very visual for us if we go to the time frame instead of 3 year. We adjust it a little bit more, go to the weekly time frame. I'm going to go from a 3 year to a 20 year and push OK. Minimize this a little bit. Okay, let's just zoom into this area here. I'm not going to the 2666 numbers, okay, everyone? If you notice, we are right on the 200 SMA on the weekly, right above it. We closed just a little bit slightly above it. We came back, retested almost this area here, and we bounced back up. In order for the 200 SMA to hold us, we have to come back to the 2700 28 and continue to the upside and get to the 2888, because this number here, if you look at it, the high of it was 2876.75, and we'll look for the 2888 85 area. That would be a very good area of consolidation. And if you notice, this is the dash line that goes across here. We need to close right above this area in order to continue to the upside. So I hope this was helpful, and I want to do one more thing. Gold and oil. This is an opportunity for oil and gold. Let's take a look at oil, CL. And on the CL, instead of the weekly, what I'd like to do is come in the time frame, go to a 20-year monthly chart, push OK, and minimize it. Oh, this is only 20 year. I'm showing just this area. I should go a little further, max it out. Time frame to the max. This is what I want to show you guys. I'm going to make this a little smaller. If you noticed from the prior lows, this is in 2002. If you look at it, in 2002, Oil prices was the low of 17.80 to $21, $22 a barrel. Then we eventually rocketed to the 147. Then we had the 2008, 2009 crisis. We came back to the range in 2009, about the $32, $33 range. We went higher to the $70, $100. Then we fell back to the 26. I mean, we missed the 26, '05 by a little bit. We got to the 27.34. If this is going to be an opportunity of 1, 2, 3, and we're going to continue higher, I'd like to see it back in the $40 range. Do we start nickeling in or positioning ourselves in the next month or so for an opportunity? Yes, you can use the options or equity or the ISO for the oil sector, or you can use the pure contract, start accumulating to the upside. Is there an opportunity in oil? Yes. Would I like to see it in this range? Yes. What we can do, we can either use, an option in this area, the $17, $20 area, or the $32 area to the 26. If this is an opportunity to reverse and come back up, I'd like to see back oil in the mid 40s, let's say $40 to $42, $45 eventually. Is there an opportunity at a discounted rate? Yes. Are we in a recession? Yes. To go back to 2002 in oil, that's a really discounted rate. Before we had this consolidation for 2 years in 2004, and eventually we broke that 32, 33 barrier. We came back in 2008, 2009 down to that area, went back up, came back down, went back up, and we are back in the same category that we were before in 2002, 2008, 2009. I'd like to see oil reverse and come back up. I'm not telling you to get in. I just trade what we see and what we can accomplish from we limit our losses. We try to protect our gain, and we trade to either upside or downside, trade what we see, not what we think, okay? So that's in oil. Let's take a look at GC, and that's the gold. If you notice gold, we took off, to the 1900. We double topped almost up here at the 1780 area, 1790. We got to the 1700 here. We did a double top and eventually reversed back down. On the daily, gold looks a little bit more tempting sooner or later. That fear gauge, usually we get something out of it. I'm going to show you the weekly. This is the consolidation, where we went from the 1200 area and we went higher. We came back to the 1446, 44 area, which I had this, dash line. We bounced off this minor little channel, but if you notice, the major channel that I have is basically down here. If gold cannot hold, I'd like to see the 50 to 38.2, which is the 1442, or the 50 SMA for support to bounce back up. If not, we'd look for the 116, and this was the prior consolidation, at the 1360, 1360, 1360. We had the 12 to 62s, 1268 before we got the big bounce. If the 1300 is gonna hold, 1350, 1360 gonna hold, we have to hold the 50 and the 38.2, the first one for support, and the 50 SMA to continue higher. Is gold an opportunity to the upside? Yes. Can it come down a little further? Yes. But what I want you to understand, that this was the consolidation from before. We went higher, we came back, retested it, we went sideways, we went higher. We came back to that area and bounced off the 200 SMA. In order for gold to continue, it has to clear the 61, the 38, and the 50. Would I like to get a first positioning here? Yes, I would like to get one, or in the backside of this down channel that we fell from, because this has a green box here that we fell from. Let's just zoom in to show you. This was the consolidation before we took off, and this was the channel that we went and we fell through it. So it came back to this minor one here from before. If that 200 SMA doesn't hold, I like to see the support in the backside of the other channel in order to support us and come back to the upside. Okay, everyone? So that's on gold. Let's go back to ES one more time. And I'm going to mention this on the 4 hour. Just keep an eye on it. And this would be helpful for us to recognize the levels. If you notice, when we came back in the ES, when we coming back up, I'd like to see, that 28 21, 28, 88 area in order to continue higher. If we cannot hold the 2700, 2738, I think eventually we'll fall further down. And I hope this was helpful. And enjoy your weekend. I look forward to seeing you at Solstice ATR or on Discord. We have a live chat room that we do live broadcasting and allows you to see how we trade, what we see. It's more of an education when we enter, when we exit, and why we call those areas of support and resistance on daily basis. And take care, everyone. Over and out.